9 o'clock on the nose. Gotta love it. Everyone, this is James coming to you from the 10-Minute Trader up here in lovely New England. Anyway, it's 9 p.m. Tuesday, January 31st, 2017. It is the last day of January. Where did the month go? I really couldn't tell you. I'm in the same position you are. I have no clue where the month went. You know, one day it was New Year's Eve, having fun, having a blast, enjoying the New Year coming in, and all of a sudden, it's done and gone, you know? So now we're at the last day of January. Tomorrow's the first day of February. Well, let's jump on into things and see what we're looking at. All right, like I said, to January the 31st, let's take a look at where we are and market watch. Today's the get out of there because that's the February. Today's the 31st. We actually had 14 companies that went in EX today. Okay, we could take a look at some of those if you'd like. Yesterday we had 30. 30, there we go. Let's see if you can see some of those. Some of these names you're going to recognize and some of them you just won't. See if we know any of these. Elcut, Hasbro, we know that one. GT, don't know that one. That one. Oh my goodness! You figure I've been trading for years. I would know some of these. I really don't. I don't, because I really have no interest in finding out who the company is and what they do. I'm interested in just a few things: making money. I want to make my money. I want to get in. I want to get out. I want to say thank you very much. Tuesday, the 31st, which is today. 14 companies paid a dividend today, or went EX today. See the EX dividend date, 31st, that's today. The date of record will be in 2 days. And then the dividend payment date will be whenever that is. Here's the 13th of February, the 10th of February, the 14th of February, the 23rd of February, March 1st. But anyway, the 4 important dates you need to know when you're dealing with a dividend stock. The announcement date, that's when the company comes out and tells you what they're paying, when they're paying, how much they're paying, why they're paying, all that kind of nice, neat, fun stuff. Do we really need to know that? No. There's only a few things you need to concentrate on. Number one thing is the EX date. Because if you want to be qualified to buy if you want to be qualified to capture a dividend, you have to own the stock for a minimum of 2 or 3 days. That is called a settlement period. This question came up on one of my YouTube videos. Somebody asked me, or somebody actually stated that you don't need to own the stock on the date of record. It was one of those conversations you get dragged into that you really don't want to get dragged into. I've been doing this for a long time, and then you hear things that go against what you thought or against what you were taught. So I did some research. It's like you have to buy the stock and own it for a minimum of 2 or 3 days, because that's a settlement. It's like you buy it today and you can sell it tomorrow, but do you actually go on record as owning that stock? No, you don't, because you bought it, you sold it, you were speculating, I suppose. You were trading in the float, however you want to word it. But when it comes to actually receiving a dividend check, you have to buy the stock before the EX date, because the EX date is the last day the stock trades before the dividend is paid out. Okay, and the dividend is paid out after the date of record, because on the date of record, it is exactly what it sounds like. On this day, who owned it? Okay, just because you own it on the date of record doesn't mean you're entitled to the dividend. You actually have to own it for a minimum of 3 days. Okay, 3 days. So you buy it before the date of record. If you buy it before the EX date. So if the EX date is the 31st, you would have had to have bought it yesterday. That would have been the 30th. So you bought it the 30th, the 31st, and the 1st, and the 2nd. Okay, that's the 3 days. Okay, you have to own it for 3 days in order to be qualified to capture the dividend. That's why I've been saying for the last 5 or 10 years, buy it before the EX date, sell it after the date of record. And then someone comes up and says, no, that's not right. I bought the stock and I sold it before that, and I still got a dividend. I honestly don't know how that happens. Sometimes it's a human error. But for the most part, they have certain rules. If sometimes, once in a while, it goes against the rules, hey, great, more power to you. But for the most part, the lines are pretty black and white. You buy it before the EX date, sell it after the date of record in order to get a dividend check. Because all stocks, if you want to be on record as owning the stock, you have to own it for at least 3 days. Okay, if I'm wrong, I'm wrong. I admit it, no problem. But, show me that I'm wrong. Show me the proof. Anyway, let's get down to some trades. So let's see how some of the companies that went EX to date performed. Okay, so if today's the 31st, you would have got in 10 days ago, which would have been the 16th, which is Martin Luther King Jr.'s birthday, which the stock market wasn't open, so you would have gotten the 17th. Okay, so the 17th would be the big number. Okay, so let's take a look at, I'm not going to look at ADTN only because it's a 9-cent dividend, and like we said before, I don't like to chase anything less than 10 cents. Okay, so it's just not worth it for me. But BMTC, why not? Just for the fun of it, let's say BMTC. BMTC looks pretty good. It started out the year last year at 25.64. It came down to the beginning of the second week of February to 24 before it made a nice, went sideways for 2 months. Then a slow climb sideways for a little bit more into July, up a little bit, August, and then sideways for 2 months. Now we're into that pivotal point I've been telling people. Pivotal point, election day. Election day, right around the first week of November. Here we are showing on the 4th. Why is it that sometimes you get a cough or a cold, it just doesn't want to seem to go away? Anyway, all right. She went sideways right up to the beginning of November. Okay, November 7th, November 8th. This thing starts to shoot through the moon like almost everything else did. November 7th, 8th, 9th. You either went up or you went down. It's just the way it is. And it is a point and reference from now until the end of time that, hey, the election of 2016, the stock market did this. Donald Trump gets elected. Everything goes up. Here's another stock, BMTC. Okay, November, where were we? November 7th, 8th, 9th. It was at 30. Okay, from $30.58 over the next 2-3 months, she shot up to $42.57. That's a little over 30% increase in 2 months. It would be nice to have known that ahead of time. Okay, so we're looking to jump in January 17th. So let's take a look at January 17th. Where is the 17th? Right there. Okay. Now, January 17th, BMTC is looking for a 21-cent increase. She opens up at 40.20, and she jumps up 15 cents to 40.35. It didn't quite make the 21 cents. Okay, so had you got in at the opening of the day, you would have had to figure out, do I set a stop loss? Do I not set a stop loss? Do I have what do you call that? A trailing stop? What do I do? I like to just get in, let it run the 10 days, see what happens. Granted, I'd make a lot more money if I started using trailing stops. Okay, but your trailing stop has to be triggered, I suppose. So let's see what would have happened. So you would have got in on the 17th, which was a Tuesday. Nothing happened on Wednesday because it opened up and then she didn't do very much. And then here you go, Thursday, the third day, January 19th. You would actually hit your target because she hit a high of 40.55. Now remember, she opened up at 40.20. Okay, so 40.20 and add 21 cents to that, you're looking at a target of $40.41. Okay, $40.41. It didn't hit it the first day. It didn't hit it the second day. The third day, she does hit it with a 40.55. Okay, you could have stayed in a little bit longer and she hit a high of 42. Okay, that's a nice little increase. But like I say, I don't do the woulda, coulda, shoulda. Did she make the 21 cents we're looking for? Yes, she did. How long did it take? Took 3 days. Great. So let's jump on to the next stock. BSRR, that is the Sierra Bank Corp. Looking for 14 cents. So BSRR, put that into our stock chart, and she looks like a halfway decent chart. Okay, she starts off the year last year at 1807. Basically goes sideways all year round. Hits a low in July 5th, but she keeps on going basically sideways until she hits, here we go again, the first week in November. First week in November, she goes from 1738, it goes all the way up to 2885. So from 1738 to 2885, that's $11 increase. Okay, that is almost like a 75-80% increase in that period of time. Just nuts what happens when a new president comes, shake up the world, So, can these numbers be sustained? Can the stock market continue going the way it is? I don't know. Consumer confidence is up. Everybody's buying stuff. That's why the stock market keeps going up. Okay, so let's look at the 17th and look at the numbers. Okay, 9th, 10th, 11th, 12th, 13th, 17th, there she is. And what was it, a down day for everyone on the 17th? My goodness. Okay, so the 17th opened up at 26.64. So looking at 14 cents. So that would be 26.78. So we're looking for 26.78. First day, no. Second day, no. Third day, no. Fourth day, there it is, 27.28. Made it, and then some. But then she kept on going up. But anyway, so that's, wait a minute. 1, 2, 3, 4 days. So you make your target in 4 days. Now remember, we're looking at 10 days prior to the EX date. Okay, the EX date is the 31st. And we're looking at these stocks on the 17th. Okay, so we do our research, the night before, which is the 16th. And then you put your orders in the night before. I'm actually going to do a trade or two because I got some money left over from, I sold something the other day, which is kind of nice. I like it when I sell something. You wake up in the morning, boom, there's more money in there. Hey, that's great. Okay, so BSRR actually made it. CFG, Citizens Financial Group, they're looking at 14 cents also. So let's put in CFG. All right, CFG is another nice looking stock, very pretty. Okay, she starts off the year last year at 20.64, dips down to make a low of the year at 18.14 on February 12th. She moves up a little bit and goes in April, towards the end of April up to 23.58, goes sideways for a little bit. That looks like a little profit taking or some kind of a dip way in the beginning of July. Down to 1862. Then from 1862 in the beginning of July, it's a nice move all the way up to, and here we go again, the first week in November, November 4th. She settles out at $27. Okay, so now she's at 1862 in the end of June, beginning of July. She goes up to 27. The first week of November, and let's see what happens right around election time. Right around election time, she's at 26.90. Okay, from 26.90 she goes up to 36.85 within 2 months. That's a nice move. She's been going sideways for a little bit, but again, here's another stock that has been affected by the election. Don't get me wrong; it's a great thing if you're on the better side of it. So let's see what happened January 17th, 12th, 13th, 17th. Here we go. January 17th. Now this is going to be a tough one because a lot of people like to set stop losses when they invest. This is a big day. A lot of volume, a lot of movement. Okay. She opened up January 17th at 35.83. Okay, made of a 14-cent move would be 35.97. Didn't make 35.97, made 35.91 before she dropped down to 33.97. So if you had a stop loss, you didn't want to lose anything, and you got in on this stock, you would have stopped out. Okay, so I don't like stop losses. I like what is called a stop alert. So if I'm in a stock, I get in at 35.91, and all of a sudden she's dropping, I start to think to myself, I want to be alerted. I don't want my stock just to be, just to be sold out from underneath me by an automated system. No, I want the automated system to call me up and say, hey, ring-a-ding-dang, buddy, you need to take a look at this. So I take a look at it and see what's actually happening. Is there a reason for it, or is it just panic? It's the 17th, which is the day after Martin Luther King Jr. Day. I actually don't know what happened with this company on that day, so I really can't speak eloquently about that. I'm just here looking at it and see how well it performed over the 10-day period that we were looking at. Okay, so we get in at 35.83, looking for the 14-cent movement. Yeah, right here, CFG, the 14-cent movement. Okay, 35.83 with 14 cents top of that. It would be 35.97. Okay, so we're looking at 35.97. First day, no. Second day, no. Third day, no. Fourth day, there it is right there. 4 days, in, out, 4 days. Granted, it's not a huge movement, but hey, you do a couple thousand shares, or 10 or 20,000 shares, it adds up quick. A couple hundred shares, I don't know, is it going to be worth your while? Because you have to remember, it's how much you profit. Not how you play the game, but how much you actually win, how much you actually have at the end of the game. If you don't have a large enough account to make trades like this, then you need to start doing some math, because it has to be worth your while. Put the time and the effort in. Just because the stock moves, if you don't have enough movement or enough shares in order to make worth your while. If you want 3 or 4 shares, it's not going to be worth your while, because the commissions alone are going to bury you. Okay? So you might want to look at a lower cost stock. Now, this is only $36 stock. Okay? So 100 shares would be $3,600. If you bought it on margin, it would be $1,800. Okay? But 100 shares is only $14. Okay? That's all the dividend check is going to be. You own 100 shares of CFG, and you're only getting $14 commission. $14 profit. If the commission's $5 going in, $5 going out, that's $10 off the top of the list right there. So you're only making $4 off this trade. Okay, so you got to make sure the math is there for you. If you can only get 100 shares of CFG, you might want to think of holding off and say, hey, I'm only going to be able to invest in stocks that are $10 and below. Because $10, a $10 stock, 1,000 shares, 100 shares is going to be $1,000, 500 on margin. Okay. So for $500, you're only going to make $4 off that. 14 cents a share. So make sure the math is there when you're doing these trades. All right, let's jump up to the next one. Where are we? CQP. Gotta check my other computer over here to see who's asking questions every once in a while, just to make sure I'm up to date with everyone. All right, CPQ. It's an interesting looking chart, for argument's sake. She starts out the year at 23.11. For the first couple of weeks, she drops down to 1943. Interesting number, 1943. And that was the in beginning of February. From there, from the beginning of February, she shoots up to 30.54. That's almost doubling in price in less than a month. That's great. From there, she does what's called channeling. She's staying between 31 and 26, goes all the way through, all the way into the third week of January. Basically did nothing, just sideways. All right, so let's look at January 17th. January 10th, January 12th, January 17th. All right. January 17th, CFG. Who is CFG? I forgot already. Citizens Financial Group. We're looking for a 14-cent move. January 17th, which was 10 days prior. She opened up at 28.36. So you add 14 cents on top of that, so you're looking at 28.50. We want to hit mark of 28.50. All right. So the first day she hits 28.45 for the high, didn't make it. Second day didn't make it, hits a high of 28.35. Third day, booyah, there it is, 28.56. Okay, so you're out in 3 days. 1, 2, 3, boom, you're on your 14 cents. Let's do two more, then we're going to jump up to what we're looking at. CPQ. All right, Cheniere Energy Partners. I like energy stocks. Energy stocks are great, especially this time of year because everybody needs energy to keep their houses warm. January to February, March. Okay, looking 42 cents. Let's put CQP. Wait a second. CFG, CQ. That's funny. I was looking at the wrong stock, giving you the wrong numbers. That's funny. Okay. Cheniere Energy Partners LP, looking for 42 cents. So let's go back 17th. Let me restate that. Okay. So 28.36. We're looking for 42.5 cents on top of that. Okay, so that's going to be 78. 28.79 is our new target. 28.79. First day, no. Second day, no. Third day, 28.56. Nope. Third day, 28.67. Fourth day, 28.99. No, fifth day. So you're on the fifth day, 42 cents. 1,000 shares, that's $420. Not bad on a $29 stock. Okay, I could deal with that. That's happy. All right, one more. FELE, Franklin Electric. Ooh, electric company, like those. FELE. Here we go. What are we looking at on FELE? We're looking at a $40 stock. Here she starts out the year. All right, at 27.18. Goes sideways for about a week. Nice slow uptrend. Right up to July 8th, the 33.87. That's a movement. That's I think almost a $7 movement, $8 movement, something like that. She gaps up, and she continues on up, right into the end of July. 39, goes sideways, makes a high, right in December 5th of 44.27. So she starts out the year way down here at 26.69. 26.69 at the beginning of the year, she hits a high of 44.50, somewhere in that area. Okay, that's a nice move. Going side, drop down a little bit, some profit taking, going sideways, and here we are, January 17th. That right? Yep, January 17th. We're looking for 10 cents. Yeah, get that on the very first day, most likely. No. Wow, she opened up at 39.80. She hit a high of 39.80 and the low of 39. Wow. Second day, nope. Third day, 39.95. That's 15-cent move. There you go. So you're out on the third day. All right, it is what it is. 3 days. All right, so let's get out of here and take a look at what's actually coming up. Okay, so today being the 31st, we want to look at what's coming up 10 days from today. So what can I look forward to in the next 10 days? Okay, so let's jump to February 14th, which is going to be Valentine's Day. Okay, on the 13th, which is right here, which would be 9 days away. So, wait a second. That'd be today. So we're looking at tomorrow's list, which would be Wednesday, the 1st. So we're looking at February 15th. And there are 23 companies on February the 15th. Alrighty. Now, I can take all these companies, put them into the software, and I'm going to show you quickly the software I used it to put in these right here. Coming down. All right. Let me briefly explain to you what I'm doing here so you understand what it is I'm looking at. All right, for the week of February 14th, which is the third week of February, we're looking at 52 companies on Monday, 16 companies on Tuesday, 23 companies on Wednesday, 5 companies on Thursday, and 4 companies on Friday. So we can take all these companies, insert them into the software right here. All right, I already did this earlier, so I'll give you an idea of what's actually going to be happening. Okay, so you insert it into the software, and then hit go. All right, then we're going to look at who's worth looking into and who's not worth looking into. All right, first off, AMGN. No, thank you. You're missing, 4 years worth of data? Only have 5 years worth of data? No, thanks. Not worth it. Okay, DD. These numbers look pretty good. I can deal with that. I don't really like this 22 days here, 21 days there. I don't like that. Closed at 76. The high for the year was 78. The low for the year was 54. It's got a 1-year target of $80.94. I like that. The dividend is 38 cents. I don't really like this right here. The yield, if I was going to buy it and hold it for the whole year, I'm only going to get a 1.96% return. Now, I don't mind that, normally, but I'm going to be in and out of this thing in 3 days. Hypothetically speaking. It's not guaranteed. Hypothetically speaking, I'm going to be out within 3 days. Let's see what the chart over at Yahoo Finance takes and says. So here we are over at Yahoo Finance. We're going to take a look at the 10-year chart to see what this thing has done for the last 10 years. And this looks like a perfectly normal dividend stock chart. 10 years ago, the company was at 46.93 or 46.94. Okay, just like everything else in 08, 09, drops down to 17. Then from 17, she has her ups and she has her downs, peaks and valleys, ups and downs. So right now she's at 75.50. All in all, it's not that bad of a chart. I've seen worse, I've seen better. And you can see all these little D's down here at the bottom. It tells you how often it's paid, its dividend. And then the little bit on the blurry side, the red and the green in the background, that shows you volume. So the volume is relatively steady. No huge, massive variances or variables in the volume. So that's a good thing. So all in all, D&D, which is DuPont. Everybody knows who DuPont is. They've been around since the 1800s, so it looks good. So DuPont may just well be a good stock to get into. Okay. IP, 1.67. It's like 2 days. That's great. So it closes at 56.89. The high for the year was 58. The low was 32.86. Now this right here is just a tiny bit disturbing. They have the 1-year target of 55.67. So if the stock closed at 56.89, do I really want to buy a stock that the analysts say is going to go towards 55.67 in a year, going down? Let's see what the other chart says. So I'm going to the 10-year chart on Yahoo Finance for this company to find out how that looks and why are they saying they're looking for it to go down. All right, the dividends look normal. The background noise with all the volume looks normal. 10 years ago, she was at 35.90. Did it what everything else did in 08, 09. Bottomed out around $5.61. Ouch. Can you say ouch? Wow. What was that? From 38 down to 5? That's more than a 50. Holy cow. That's a big drop. Okay, so $5. Now she's at 56.60. Okay, that's pretty good. International Paper Company. This one I'm sitting on the fence about. because I like the idea of, being in for 2 or 3 days and then getting out and getting my little dividend. And let's look how many shares are trading. You get 2.6 million shares, and if I'm holding it all year round, I can look at a 3.23% yield. It's a lot better than DuPont, but International Paper, that's a big company. Okay, Lilly. I'm assuming this is Lilly, L-L-Y. I'm not liking the 46, not liking the 0, not liking the 38, the 51. Makes me a little nervous. Look at average 17. We're going to say no. I don't even want to look at everything else, but no. MRO, 44 days. The rest is 1. So give me an average of 6 days. It's a $16 right here. Dividend 5 cents. No, sorry. I don't want to chase 5 cents. Okay, SLB, we're looking at 50 cents. Okay, 1.3 days. That's about 2 days. Okay, closed at 83.61. The high was 87. The low was 66. We got a 1-year target of 96. That's a nice movement, 96. Okay, 5.5 million shares. The yield, if I hold it all year round, it's going to be 2.3. That's not bad. And we're looking for 50 cents. Okay, I can do that. So this software looks good. Let's see what the chart over at Yahoo Finance says and see if this is one that we can leave on our radar. Alrighty, makes me a little nervous looking at this one because this is some big dips. Alright, we got 10 years ago today. This thing was at 69.10. Okay, 69.10. She jumps up to a high of 107. And then in 08, she drops all the way down to 38. So from 109 to 38, that's 60%. Wow. It's not as bad as the other one we just looked at, but hey, 60% is not bad. Okay, so from 38.06, she makes a nice move all the way up to 117, and now she's right at 83. It's not the worst I've ever seen. Schlumberger Limited, I'm not quite sure what they do. Isn't that terrible? I don't know what they do. Look at the dividends. A little patchy here, a little patchy there, a little patchy. It's not consistent. Okay, so this one, A-B teetering on. Let's see what that one looks like again. SLB. All right, I'll hold off from deciding one way or the other. You know what? Let's stick SLB into the other software and see what it says. SLB. Now remember, it's 10 days out from January 31st, which would be the 14th. Okay, plot the dividend. Then there you have it. All right, let's get rid of that chart and take a look at the average. Okay, that I can deal with. It's not that bad. Okay, from here you can see the average line. Okay, if I get in 10 days prior to, I might be able to get out within the first 2 to 3 days, which is exactly what the average looks like. 1 day, 1.2, 1.3, which is about 2 days. All right, I can do that one. Okay, you get in, and she goes up a little bit, goes down a little bit, then yeah, that one sounds good. All right, let's get back to where we were. Where were we? Oh, we were here. Okay, so SLB looks good. TGT, we all know that's Target. That's a no-brainer. I'm not even going to have to look at the numbers. All right, Target was close to 64, hit the high of 84, a low of 62, and it's the 1-year target of 73. It's got a 60-cent dividend, and it's a 3.7% yield with 6 million shares. That, my friends, is a no-brainer. Okay, that's what I mean by no-brainer. We're going to do that one. I'm actually going to do that one. Okay, so let's move on. What else do we got here? Now let's do Target right now. See what Target looks like. Okay, let's trade. Come on. Gotta wait for it to warm up. TGT. Target. And let's go over here. TGT. Target. Wow. I really don't like the chart on Target. But let me go over it with you a little bit and tell you why I don't like it. Some things I like about it, some things I don't like about it. Okay. A year ago, Target comes on the scene at 71.10. The first couple of weeks, she drops down to, first week of February, she drops down to $67.97, $68. from there, February 10th, she shoots up to a high right in the first week of April, which is a month later, to 83.93. It's 84. So she goes from 67. Oops, I don't like when it does that. She goes from 67 on February 10th all the way up to 84 March 21st. That's a nice move. Go sideways for a little bit. And here we go. From end of April, she's at 83. And the middle of May, which is like 2 weeks later, she's down to 66. Okay, with a nice drop. Nice drop right there. Okay, it's actually 2 drops within a week. Okay, she's at 79.89 on May 10th. She drops down to 75 the very next day, or 76. 5 days going downwards. Then she drops from 73, 75 all the way down to 67, 68 within a day. I don't like drops like that. Okay, go sideways for a while. We're looking at and pivotal point again the first week of November. November 8th. Okay, November 7th, November 8th. She moves up, 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 up. November 15th, she gaps up from 72 all the way up to 76. I love gap ups like that, and they're great. Sideways for a little bit, into a downtrend from 77, 62. Drops, all the way down to 64.09. It's been going sideways for the last couple of days. So, target, get in, get out. She's on the, I'm pretty sure she's on our watch list because she's like a dividend king, or not a dividend king. I think she's not an aristocrat, but one of the dividend champions. Been increasing the dividends for quite a while. And it's a household name, and she has weekly options. So, for the fun of it, let's see, we have 3 days. Let's see if we can make a little bit of money with target. I want to do an option spread, which is a vertical. She's at 64.48. $64.48. So it's 11 cents. Do I want to do that? That's like a 20% return in 3 days. If she goes up, stays above 64, that's pretty good. So if she stays above 64, which is right here. All right, right now she's at 64.48. She got a dividend coming up. The software says, let's put it into another piece of software because we only put it into one. Let's see what else she says. Okay, TGT, right? All right. We're going to go to TGT. TGT. Plot the dividend. Okay, get rid of that. Stick with the average. Okay. Looks like she's going to go sideways for a little bit. For about 2 weeks. And then she's going to shoot up. So we don't want to go short off. She want to go a little bit further. So she might go sideways. All right. So that looked good. All right. Let's go back here. If we do this to 63.5, 64, we'll look at buying into 39, getting 11, which is 30%, 30, 20, 25, 26, about 26% return in 3 days. Okay, if the stock stays where it is, or as long as it stays above 64, we'll be making 30 some odd percent. And it's a $64 stock, so let's do 20 contracts and see. All right, so 20 contracts. The most I can make out of these 20 contracts is $220. That's it. It's a max. But how much is it going to cost me to do that trade? It's going to cost me $780. See, buying power effect. So it's going to take out $780 away from my account, and the most I can make is $220. All right. So do you see where I'm going here? Target is going to highly probable the target is going to stay where it is or go up within the next 3 days, because they get the dividend coming up in 10 days. Okay, so dividend capturing works 100% with target. Okay, so you buy it before the EX date, sell it after the date of record for a little bit of profit, and then you sell it and move on to the next one. So what I'm going to do is I'm going to buy the option, the spread option, which is I'm buying the how do you even explain that one? All right, let's get out of here for a second. All right, I'm buying the 63.5 call, and I am selling the 64 call. What does that mean? That means the most money I can make is the difference between the 63.5 and the 64. It's only 50 cents. That's the most I can make out of this deal. Okay? Now, I'm paying 39 cents for this. So 39 cents, take that away from the 50 cents that I can make. The most I can make on this is 11 cents. I know it's not a lot of money, but 20 contracts represents 2,000 shares. Okay, what is 2,000 shares? 2,000 shares comes to the equivalence of 220 bucks. It's not a lot of money, right? How much is it costing me to do this trade? It's costing me $780. All right, so if I'm investing $780, the most money I can make is 220. What is my return? Okay, it's over 20%. And that is for 3 days. 3 days, 20%. That's a great number. Now, let me show you how I can do this. The stock is right now 64.48. Everybody knows who Target is. Okay? They've been increasing their dividends for quite a while. As long as the stock stays above 64, okay, stays above 64, I'm making that money. I'm making 220 bucks. Now, if the stock drops below 64, she can drop all the way down to $63.89 before I start losing money. Okay, she's at 64.48. You got 3 pieces of software saying she's going to go up coming into the dividend play. The dividend play is 10 days away. So the dividend play is coming up in 10 days. All right? The stock goes up coming into the dividend. So that's great. I don't need it to go up. I need it to stay the same, or it can go down a little bit. Okay, so stay the same, go down, or go up. I make money. It is awesome strategy. All right? So you get 3 pieces of software saying this baby's going to go up. So that's my indication. So here we go, and there you go. Rejected my blind power below. Oh no! All right, so I can't do that one. That's funny. Wow. All right, so why can't I? That's why I have too much money in DFS. Yeah, I got 69,000 into DFS. Hasbro, PA, TJX, WSR. All right. Well, I am running 2 trading accounts. This one right here, we do a lot of option trades. So let's go to the other one, because I know I sold something in that one the other day. There we go. Let's do TGT, because we like Target. Come on. TGT. All right, so this one is just dividend capturing. So there's no option trading in this account. So what you're going to do, we're just going to do Target in this account. 64.48, and we want, how many shares are we going to buy? Break out my trusted calculator. And we divide it by $64. That's going to give me 800 shares. So let's go back to 800 shares. I right click on that and I hit buy custom. Why am I hitting buy custom? Because I already have it set up to hit my target. Now I said 800 shares, right? So buy 800 shares, sell 800 shares at target with a profit already put in place. Market limit order. Let's hit confirm. Let's see what she says. All right, so I'm going to buy 800 shares of target at the market first thing tomorrow morning. So at 9:30, right, as soon as the market opens, I'm going to buy 800 shares of whatever the market price is. And as soon as that order is filled, which is usually 9:31, I am going to automatically sell 800 shares of target plus the 2.5%. Now, 2.5% is a number I've come up with only because I've been doing it for so long, and that's the number that hits the target best. Okay, so 2.5%. What is this going to cost me? It's costing me right around 26,000. All right, so let's send that one. Okay, and that one worked. You know, see, I'm tempted. I really am tempted to doing that trade I showed you just a little minute ago. Doing that spread, the 63, 64. But I don't want to deviate from the strategy, because the strategy on this account is just dividend capturing. The other account, it is options. Okay, so this one, let's open this up. Since the beginning of the year, the stock market opened for this year on the 3rd, January 3rd. So we're into it 4 weeks. You know, it's 1 week, 2 week, 3 week, 4 weeks. 4 weeks, this account is at 5,680 year-to-date profit and loss, which percentage-wise is 5.6%. So that we opened up the account at the beginning of the year with 100,000, and that 5.6% of 100,000 is 5.6%. That's why we use that number, because it makes the math so much easier. Okay, so just the dividend capturing, 5.6% in 4 weeks. It's really not that bad, because you get figure 52 weeks. That's a little bit over 1% of weeks. So we can look at on target for 50% on this account. Let's take a look at the other account real quick. This account incorporates options. Like that option trade I just showed you. I could have made, but I'm tapped out. I hate that, being tapped out, passing up a 30% profit because I'm tapped out. You know what I could do? I could take the $144 loss there and then jump in and do that trade, because I believe we've been into this one a little bit too long. Let's view the order on this one. No, wait, not the order. I want to view the trade on this one. View the trades. I'm viewing the trade on this one. I ended up buying WSR at $13.95, and right now she's at $13.91. I got a target of $14.05. If I go ahead and sell this now, or sell this first thing in the morning, I will be able to jump in to that target trade. You know, I can lose $144, make the 220 on the other one, kinda, but that would be my first loss for the year. And when did I get into this one? I got into this one on the 18th. The 18th, which was exactly 10 days ago. So I should be getting out of this one. Wait a minute. That's right. This one should be having its in. Oh, so if I hold this for another day, I'm going to actually be collecting the dividends. I got in on the 18th. 10 days is the first. So if I sell it on the close of business tomorrow, I'll still be able to qualify for the dividend check. What is the dividend in WSR? Whatever it is, it's 3,600 of them. So all right. let's take a look at WSR. More info on WSR. Fundamentals. Is that what I want to look at? Alright, here's the fundamentals. Whitestone Real Estate Investment Trust. Market edge, blah, 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 blah. Look at all this stuff. See, this stuff can get really confusing. Reds per share. Earnings per share. 31 cents earnings per share. Dividends per share. So $1.14 dividends. So what is the date of the dividend of this one? Financial, blah, 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 valuation. Dividend payout per share not available. Blah, blah, blah. Dividend yield. Averages its current is 8%. That don't sound right. Let me go. I hate this crap. It's not easy to figure this stuff out. Who did I just say that was? Isn't that funny? Who do I say that was? All right, WSR. All right, let's put in WSR. All right, WSR. And that would be today, which is no, wait a minute, it would be the 1st of February. Okay, that's 10 days. 1st February, let's find out what's happening here. Okay, 1.6, should have gotten out. The dividend is 9 cents. How did I get into it? 9.5 cents, so it's 10 cents. So let's take a look at the chart, WSR. $13.91, basically stock going sideways. 10 years ago she was at $11.58. Oh, $11.98, 12 bucks. Now she's at $13.91. She's basically going up, down, up, down, up, down stock. She's at $13.91, but look at all these dividends they're paying. Wow, gotta love it. What am I looking at? WSR. Come on. WSR. Okay, WSR. WSR. Alright, and hit Whitestone Real Estate. Come on. Why is this empty? I'm not really liking this. It's making me a little frustrated. I want the fundamentals. I want the fundamentals of WSR. Where are they? Alright, I'm going to do this the old-fashioned way. It's not working out quite right. Yahoo. Yahoo Finance. There we go. Stock symbol lookup. Come on. WSR. Now, I don't like it when it takes a long period of time for it to populate, because when you have a lot of programs running, it's hard to see what's going on. Now that is just a little frustrating. Now I'm looking around, looking like an idiot because this is not coming up. No, I already went to that one. Okay, here it is, Whitestone Capital WSR. EX dividend, the yield. Okay, so the dividend is what? That can't be right. It can't be $1. Okay, let's go to historical data. Okay, so she hasn't had its dividend yet. Alright, last time I had dividend was 9 cents. That was back in December 30th. So I'm not going to have another one so soon. So why do I have this stock? I have no idea. Guess what? Yeah, I'm out of here. Tomorrow morning, gonzo. Okay, so why did I get this one? WSR. Well, you know, hey, we all make mistakes. I can't figure out why I got it. There has to be a reason, which means I'm going to have to go back into my video from a couple of weeks ago to find out why I bought this in the first place. Anyway, let's make a closing real quick. Let's get rid of WSR. All right, let's get out of here. Get rid of that, cancel that. Cancel that and replace it with order of 13. Let's put the WSR in here, back into the chart. WSR. And she closed at 13.91, so I want my sell order, which would be at least 13.92. All right, and I want it to limit, good to order, 3,600, and she's off. All right, so we replaced it for that, and that's where I'm going to be. So tomorrow morning, although I really don't like doing it, I'm going to be online tomorrow morning because I want to do that target trade, that option trade. So it looks like I'm going to be back here tomorrow morning at 9:30 to see what happens with this trade. So I'm going to get out of WSR first thing in the morning, and then I'll probably jump into something else first thing in the morning, before 10 o'clock. Most likely it's going to be that target trade. All right, so I'm going to end for now, and hopefully I answered all your questions. And if you have any concerns, let me know. The software is there. It tells you how the stock has performed, when the best time to get in and get out. So that, my friends, is it for today, and I will catch you the next time on Dividend Stock Talk with James Gardino. You guys have a great